Hello, good morning, everyone. Tim Davis coming to you guys again, yet with another video. I'm gonna try to do this as much as often now. So someone asked me, was it possible I can do this daily? Probably can't do it daily, but I'm gonna do it as much as often, especially with the market still going through a transition. And we've still got these wild swings, volatility is still elevated, and we're still in the bear market. So regardless of what these rallies showing, we are still in the bear market, not out of the woods yet. So with that said, I'm starting off right now since it's June the 1st, 2022. The time is now 5 a.m. in the morning. So this is a very early video before I get my day started. And I'm gonna start off with looking at the monthly charts right now since we have ended May and we're entering into June. And we'll look at a couple of monthly charts first, and then we'll break down um, current action by looking at daily and 4-hour charts, and I'll also show you a couple of ways that I have adjusted my portfolio yet again, preparing for a possible next leg down in overall market. Now, here is a monthly chart of the VIX, and again, I've been tracking these markets, folks, for the past ever since that COVID plunge, just to track overall directions and patterns in the market, and what patterns are starting to pop up in the market for um, longer term moves. And getting rid of some of these drawings that I have on here. So just by looking at this monthly chart of the VIX, if you are a visual um, learner and a visual person who can pick out patterns, just by looking at this monthly chart of the VIX, before I even expand this, folks, let me draw your attention to something. If we look at the full stochastics of this VIX since August of 2021, anybody else notice this? Do you notice the pattern? It's been making these higher highs. Look at that. The full stochastics of the monthly chart of the VIX, it has been making these higher highs since around August of 2021. Higher highs and higher lows. It is calling up for a breakout, folks. I'm telling you, the VIX is calling up for a longer term breakout, and it's been calling up. Started this pattern back in July, around July, or around the middle of 2021. The VIX has been forming this pattern on the monthly chart. Okay, forget the day-to-day noise, week-to-week noise. Look at the monthly chart. It's been calling up the full stochastics and the winners percentage has been calling up for a possible breakout move. So that is something that cannot be ignored. And when you see the longer term monthly charts showing you some type of setup for possible bigger move, you cannot ignore that. And you just need to be ready for when that bigger move starts to materialize in a big way. Just have yourself ready. And I tell people, stay ready so you ain't got it. I hear this saying all the time from guy I follow in the NFL world, stay ready so you ain't got to get ready. Well, every time I see these big rallies in the markets, I'm always looking to add, some protective positions to be ready for the next move down. So I did not do anything different this past week. When we see the big rally on last week, I started adding to my IWM put spreads and setups that I have. I looked at started searching for some stocks that looked like they had big rallies, or had big drops and that struggled since their earnings report to participate in these big rallies. I found one of those, which was in Target, believe it or not, and it doesn't look like it's faring well with all these big rallies. It's like it's running into another wall of resistance. So I added that one also as a put spread. But so again, monthly chart of the VIX, as you can see, I stretched it out, pulled it back tight so you can see the cooling up pattern that's starting to show up in the full stochastics and the winners percentage. And if you look at the RSI on the bottom, you'll just see a rounded type pattern as though it's handling it's creating also a cup and handle type pattern. Let me annotate that. So down here in the bottom of my screen is my RSI. And since we got to this high back in 2020 when we had a big spike in the VIX, we had one there and we had also a big spike in 2008, 2009. Just circle both of those. And in 2008, when we had the big spike, we sold off. We sold off to a certain point until we made another spike higher. Well, same scenario happened here in 2020, sold off. But look where the VIX, I mean, the RSI stopped short. It didn't go down as far. RSI didn't go down as far as it did back in 2000, 2009. So from 2020 to now, we just sort of kind of like rounded. It looks like we are starting to turn back up. And you can see that we're starting to turn back up by, again, paying attention to the win percentage. Look at that overall move up that it's been showing. And overall move up has also been showing in the wins percentage. Folks, that is a sign. I'm telling you, do not fall in love with these rallies, because a lot of people are going to be highly disappointed. And I'm going online to say not if, but when the market starts a bigger breakdown. And my ultimate target is finally see this VIX pop above 20. I mean, I'm sorry, above 40. And I think we're going to get that. And that could be happening sooner than we think, folks. That could be happening sooner than we think. So again, here's our monthly chart. Now we stretch it out. So you guys, a pattern that's starting to form also in the price action. So you see price action in the VIX. Again, this has been our ceiling for quite some time. It's right here. It's right around the $40 level. And as you can see, when we had the big spike back in 2020, we pulled back. And then this $40 level became like at first it was resistance. I'm sorry, support on the way down. After we dropped back below the level, we've been tagging it quite a bit since then. We've been tagging it, letting you know that it really wants to break it back above that level and stay up there for a minute. But again, from 2020 to what's happened between 2020 and 2021, market had a nice little rally. You can see the VIX stayed muted, stayed under that $40 level, and it even got down to as low as around 15, 14. But since then, folks, since about October 2021, you can see the VIX starting to heat up. As you can see, you got these bigger green candles, these bigger green months that's been forming, folks. And these moves have been getting, and you can see the bodies of these candles are much bigger than what we've seen around here. When the market was just set mute, the VIX was not really making that much noise until we got to around October. The bodies of these candles started getting bigger. The red ones and the green ones started getting bigger. So not even if you don't really understand how to pay what these candles are showing, or even understand candlesticks in general at all, look at these bodies that have been forming. They've been getting bigger and bigger and bigger since October of 2021. And not only have they been getting bigger, but the overall trend, you're starting to see it's starting to curl up. You're starting to curl up. In other words, we're starting to create these higher lows on the monthly charts, and we're starting to curl up, looking for that potential breakout above that $40 level, which I think is going to happen. So it's not a matter of if, it's just a matter of when. I think that's definitely going to happen. It's just too, the price action is too strong for not to break out above that $40 level. And also the action in a lot of these indicators. Look at the TTM squeeze. Look how it's starting to turn, and it's starting to turn positive. We got a little light blue bar that's starting to form on the upside in the TTM squeeze after such a drastic move down. That's why I love the TTM squeeze, especially on these long-term charts, because it gives you more defined definition when you're looking for a possible trend reversal. And then it's like, look at dark blue bars, dark red on the way down, then a light colored yellow bars on the way up as the VIX started to continue to gain momentum over the past year. So since the VIX has popped above 20, folks, we have not seen a move back towards 20. And now let's switch, go back to a weekly chart of the VIX. So again, since we have made that a decent move in general above this $20 level. The VIX is not revisited at $20 level. In fact, what I've been pointing out over the past week or so, if you look at for example, even to a 4-hour chart, look at this 4-hour chart on the VIX. It's waiting. It's sitting in limbo waiting, folks. You guys see that? Look at all this action in this VIX in this area. It has been in this range for quite a bit, and now you see why I highlighted this area right here. This is like a accumulation or distribution phase. This area right here has been a strong area of accumulation or distribution. Normally, accumulation is when folks are accumulating, shares or options, whatever, accumulating in this area, waiting for a bigger move up. And I say this accumulation phase because it is shown to be a strong area of support right now. On the way up, it was showing to be a strong area of resistance. Hit it there, hit that area there and pull back. Hit it here a little, hit it here a little, pull back, hit it there, pull back. And then on this next move up, so they probably was accumulating on this side too, waiting for a possible breakout for this breakout. They got that breakout. So those folks who are accumulated on the side, waiting for that next run up, did pretty well on the VIX. Then the VIX broke out and it went up to challenge the ultimate level again, right up around here. Got close to there around there, but not too close. And we traded right back down to this accumulation area. So came down here and sideways for a bit, and then we went back up. Came down here, consolidated a little bit, then we went back up. Now we are trying to decipher, because now as we get close to this end, we see that it's really starting to bunch up, and I'm making these short moves up and then back down. So these short moves here and then back down to this area is telling me that this area of support is still strong. So if this is making a real stance at the support level, somebody's going to win eventually. Either the bulls or the bears are going to win. It's my guess that the bulls are going to win this one. We're already in over hovering around the oversold territory. Sorry, oversold territory on the stochastics. Spike up on the wins percentage back to oversold territory and just hovering there. It looks like we're ready for a possible move up. And RSI has just been trying its best to create these higher lows. So everything points to a possible breakout in the VIX. So don't fall in love with the rally that we've seen on this past week or so. I think that's going to be muted. Let me show you something else. Let's go back to our monthly charts and let's take a look at the regular indices and show you how May was not a bad month. It was not a bad month, but it wasn't a great month. It was pretty much almost a flat month for the major indexes. And I'm gonna show folks this who say, "Oh my goodness, that is a strong reversal candle. We're going back up." I beg to differ. That's why I pay attention to pay attention to candlesticks, depending on where they're sitting and when they form. This is a nice defined type of candlestick that folks look for possible reversal points. Now it has to, you got what looks like a particular doji at the end of a downtrend. So could that mean we're about to reverse up? We have to see. But normally when you get these, especially on the longer term charts, you need a confirmation candle. So the next couple of months is going to have to confirm whether or not we want to continue to, reverse back to the upside. The momentum is still losing its steam on the monthly charts. So I wouldn't put too much emphasis on the way the markets ended in May. I just don't put too much emphasis on that. I still think we're going to continue to move downward. I think May was just a nice snapback month for the major indexes. And the reason being is that if you look at what happened over the weeks, we was down almost 6-7 weeks in a row, folks, with at Nasdaq and S&P. I think that was one of the longest stretch of weeks that the market has been down in many years, probably in decades. So you got a red stale light. Look at that down move. This is a weekly chart of the S&P. So you got to move up there. Then we came right back down, and then a nice green month to start. For January. For May. I'm sorry. Now the question is, do we continue to do this? If I was a bet man, I would be against it. I don't think so. I think it's gonna trap a lot of bulls. We're gonna see how that pans out. There's not a lot of volume in these markets right now to continue to push these prices higher. Is it possible? Anything is possible. Is it likely? I don't think the likelihood of us really starting a new bull market and just continuing to break out to the upside. I'm leaning in the cap that it doesn't happen. That is my thought process. So we had to see this week. Again, this is the beginning of a new month, and as you can see, we kind of limped into June because yesterday there was not a lot of price action going on, wasn't much movement, and it's like even in futures market today, markets are still just like mannering around, humming around, deciding what it wants to do. So let me go back to the monthly charts. I want to show you monthly charts on each one of these. So this is a monthly chart again about S&P. Clear, we're still in a downtrend in general. Let me do that. Still stuck in this downtrend, which means we are seeing prices come down on a regular basis. So I think we may keep this pattern going for a minute, folks. I think we're going to stay in this downtrending pattern. That's my thought process. And we may, see some bouncing around in here over the next year or so, but I think we're going to stay in this downward trending pattern on these longer term charts for now. So this is our S&P, and let's take a look at the Dow Jones. Oh, let me look at and also look at the full stochastics too down here, folks. Full stochastics. While the momentum still in a downtrend, the full stochastics still in a downtrend. Wins percentage still in the downtrend, hitting oversold levels. RSI actually still in a downtrend, creating lower highs along the way in RSI. So indicators are still in the downtrend motion. So that's what I want to key on. Is what are the overall indicators showing us is that we are still stuck in a downtrend and still stuck in a bear market. Dow Jones, same type of scenario, and without me even stretching this out first, look at this Dow Jones. Just look at the price action pattern in this monthly chart. We had a sharp move down here, and then look what's happening. We're going up, we're going up, we're going up, and then it's like we're having a rounded top, like we are starting to round and come back down in a very, very orderly fashion. Monthly chart. That's what it's like it's doing. So like we had a rounded top, put in a high, and it's like we are just rounding on down. So we'll continue to bump heads as price action starts to round down. Full stochastics also in a downtrend still on a Dow Jones downtrend on a wins percentage, and RSI is just halfway for RSI to really take a dip and go lower, but it's just muted going down on a monthly chart slowly but surely. Let's stretch this out just a bit here. Again, you see that nice, strong, not even a strong, I wouldn't even consider it a strong month, but in May, we managed to squeak out a gain in the Dow Jones as well. Got a green candle, which is pretty much where we ended, right there at the body of that candle. So we had a nice, decent month in May. I'm not gonna call anything strong because it's just a doji. It's not a, it's not a solid body candle. So it wasn't really a strong month for the bulls, but the bulls managed to eke out a gain in the Dow Jones in the month of May. All right, let's take a look at our Nasdaq, which has been one of the weaker looking indices. So this down move in the monthly charts on our Nasdaq, it's just been a lot of these Nasdaq stocks do not fare well in an inflationary environment, so they're going to show more and more, much more weakness. It managed to have a good week towards the end of the month, but it still didn't eke out a green month. It still finished in the red, as you can see with that red candle. And the momentum still losing steam. Full stochastic is definitely straight down. I think we're gonna hit these oversold levels, folks. I think we're at these oversold levels and probably meander down and probably go in a deep oversold territory, even on the RSI. That's just my ultimate belief. I think the RSI eventually is gonna shoot down here to this oversold territory. That's just my belief. I think the RSI is gonna follow Rand's percentage and the full stochastics and hit these oversold levels below this lower line of their perspective indicators. So again, not out of the woods, folks. So don't be fooled by that rally we see at the end of the month. I think we still have some weakness to come up. And as you can see, as I showed in the VIX is ready for a breakout. It's just a matter of time before it get what it wants. It wants to break out. All right, let's take a look at the Russell. Same scenario. It too eked out a positive month. But let me draw your attention back to, why I say you just don't fall in love with these candles, because they can, get you setting up thinking, you're ready to kick butt and jump higher, and then you get to have a disappointing month. And that the Russell shows that quite well. So we had back when the Russell has been in a funk, folks, since it's been in funk a lot longer than the other indices. We had a high of 2484. That was right around beginning of 2022. Since then, the Russell's been in this down funk. And it's been back and forth this year with some positive months. But look at these big red candles. When they pop up, they pop up with a vengeance. So overall downtrend still in effect. Bear market still in effect with the Russell. And then we had these 2 months. I want to say that was so this one was May, this is April, February, March, April, May. Yeah, so I would say I want to say this is April. I had to see, check that out again. But again, we finished with a green month. May was green. April, big time sell off in April. And then we had 2 months where we really didn't do much anything. So it looks like every couple months this year, the Russell's been showing some big downward moves. Had a big down move towards the beginning of the year. Right here in January, I believe February, March, April, May. So yeah, overall downtrend. Some couple months where they try to fool you, say, hey, we're ready to switch partners. Nope. April comes and say, nope, still in the bear market. Then May comes in and say, oh, we're ready to come out of this bear market. But look at the lower low. It's been lower than the previous months. So if I was a bet man, I would say that markets got happy, squeaked out a gain in May. I don't think June is going to be as easy It's just too much already setting up to show that June is probably not going to be, it's not going to start off happy, should I say, anyway. So I think we could ready start to see some rough waters again. All right. So I broke down each one of these, folks. I wanted to show you guys the monthly charts in detail as we end May and head into June. Now let's take a look at crude oil, because I still think crude oil is strong, regardless of what you see the day-to-day action. We had a big reversal in crude oil yesterday, but did it affect the overall trend? Not whatsoever. Not at all. Look at this. This is a monthly chart of crude. Doesn't look nothing like the monthly chart of these indices, do it? It's just been on a tear, and it hasn't switched partners yet. When we see crude start to have a sustainable reversal on these monthly charts, then we could be in store for what I call capitulation, where everything's gonna be sold in this bear market. And I don't think it's gonna happen anytime soon in crude. I think crude has a pathway, folks. I think it has a pathway to this 147. That's my ultimate. Oh, that is my thought process. I think crude has a pathway to this 147. Will it get there? I don't know. I was a magician, I would tell you, but the trend is still overall up and trending in that direction on this monthly chart. So we could possibly see that level. We're already in overbought territory on RSI. So we could be getting very, very close, to when we see capitulation in the market. That but we could stay overbought for a minute. I mean, that can happen. We stay overbought for the next couple of years or so. Anything's possible. But right now, I think crude is still in a strong uptrend, and I think we are trending towards that 147 mark. All right, so that is look at these monthly charts. Wanted to point all that out, show you where the strength lies, show you where weakness lies. Weakness is still in our equities, believe it or not, and strength is still in crude. All right, now let's take a look at some near-term action. Here's our daily chart of crude oil, and I think again, you think our daily chart, I think the crude oil still has some room to the upside, folks. So don't be, shocked that some of these pullback days, some of these sharp rallies and pullback in the same day. Overall, even on our shorter term charts, the crude is still it wants to it's in this range right now, but it wants to break out, folks. I think crude wants to attack this 130 level. So I think we're going to see that 130 level in June. Probably very soon. We're probably going to see that 130 level. So don't give up on crude, even with these short-term pullbacks. Look for crude to stay above. This $100 level is a strong area of support, but I think if I zoom it in even closer, we even got support at some earlier levels. So as you see, when crude hit that 130, around that 130 level, we pretty much sold off. And then crude just pretty much came down, hit a support level, and I'm gonna head to George trend lines for this one. So this level here appears to be a strong level of support. That was around a $95 level. That showed a strong level of support for crude. Okay. And it looks like we are starting to just trend higher slowly but surely, folks. Away from that $95 level. It looks like we had another level of support start to form right here around 103. So right around here. That's close to another support level, which pretty much pairs up with some of these peaks, some of these short-term peaks. I'm gonna point that out real quick. So there, little peak here. Then we got a higher high here, then pull back to that 95 support, and then we're starting to create some higher highs. All right, so in the near short term, even in short term, showing you that the crude is slowly but surely creeping its way higher and fooling folks on these short term pullbacks. So just stick with the trend. No, don't overcomplicate it. Just stick with the trend. Overall trend in crude is still higher. Now here is some short term. Here's a short term level right here. Get rid of this. So we see where we got some support levels. We see where we hit recently. We hit a ceiling. Recently we hit a ceiling right around here and pull back. So we can highlight that one. So that pairs up with this area here. So we can actually draw a trend line right here, because right there was a ceiling at one. It was resistance at one point back in February. We broke above that level and then came back down, and we started tagging that level a couple times. And I'll highlight that too. So in the near term, we tagged that level here, tagged it there, and we continued to go down. Then we came back up and tagged it here, and back down, and we tagged it here, and came back down, and we broke above it here. And look what happened once we got above it there. Let me show you something real quick. Oh, let me get rid of these drawings because it's not lining up where I thought it would line up. So let's clear them out. So again, tagged it there, came here, meandered around a little bit, and then it broke right back above it. And look what happened. Right back to it as an area of support. Look at that. Came right back down to it. Boom. And that was around the let me see what level that was. So that was right around 115 levels. That 115 level has been showing, it's been showing a strong level of support. Now let's take a look at what's happening down in our indicators to see if that support level could possibly hold. And I think it could, folks. We got over now yesterday when we hit that 119, 120 level, came right back down to 115. And I even told some folks this over this past weekend when I recorded a video on oil. I said expect a pullback in oil because we were in the overbought territory on the RSI, and it did exactly that. So when you see these overbought territories, even on these short-term charts, pay attention to them because it may be a setup for it. Look at the longer-term trend and it's showing you that we want to go higher. When we get overbought on these 4-hour and 1-hour charts, pay attention to them because that could be a good time for you to wait for a pullback and then establish your positions by accumulating some more positions. So we was in extreme overbought territory on the 4-hour chart. We got a pullback, and looks like we are possibly ready to go right back up. Whereas percentage showed you oversold territory. We hit that oversold territory, and full stochastics, we hit the oversold territory. Didn't go all the way down to it, but we did hit it. So this 115 level might have been a strong temporary short-term level of support. So we got to see how that pans out. If that was a strong level of support, we should see another rally here soon with a possible chance to break above 120. All right, so that's took a look at long-term crude, short-term crude. Again, long-term like crude's ready to just power higher. Short-term, like we just possibly hit a support level around at 115. And like we're possibly ready to take that next move higher. All right, one more thing I want to show you guys. I don't think I showed this recently. but it's time to revisit it now, which is the SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies that are trading above their 200-day moving average. Again, if you use the thickest swim, it's SPXA 200R. All right, and I like to highlight this tool to show you guys the overall breadth of the market. So as you know, we had a nice strong, the market tried its best to reestablish itself in May, and show breadth of the market moving back up. But for those folks who haven't been following me for a while, let me show you what the ultimate, how this breadth looks now. So we got to as high, and this is a monthly chart of this tool too. So we got to as high. Let me get rid of some of this. Move that. Move that. Move that. Now, history shows we got to as high as 97% of the S&P 500 companies trading above their 200-day moving average. That was around sometime in 2021. History shows whenever we get up between that 90 to 100 level, now this pretty much means, folks, that almost all of the S&P 500 companies were trading above their 200-day moving average. Highest you can get is 100%, lowest you can get is 0%. So we got up to 97%. When we get around these levels, we normally have some type of pullback in overall breadth of the market, which bleeds over to the overall price action of the market. So the breadth of the market, the percentage of stocks above the 200-day moving average eventually leads over to price action. We start to see the price action in the markets decline once the breadth starts to decline. So we got up around that level, 2020, and you see what happened. We had a pullback, got up around the level, close to the level here, not as high as 97. That was in 2017. But my point is, when you get up to extreme levels, especially around 97, like we did in 2021, like we did here, it was 2011, like we did here. That was 2009, 2010 to 2011. We hovered around that level after we got a big rally from the pullback from 2007 to 2009. Got a big rally, made it back up to that level, 2009. We stayed up there for 2009, 2010, and then we pulled back. We didn't pull back as drastic as we were. We only pulled back about halfway, back down to about 20%. And here was one of the ultimates right here in 2007, from 2007 to 2009, we went from about 90, 95, close to 95, 90, 95, all the way down to zero. Zero, folks. To zero, which means there were no stocks above the 200-day moving average back towards the end of 2008 and beginning of 2009. And honestly, I think we are heading there again. We see we got down to zero during the COVID plunge, but that was a quick snapback. I don't think we're going to see that during this time. I think we're having a slow grind lower. I think eventually, and I wrote my target. I put my target down here already. You see, I got this arrow down here. I think eventually we are going to see another zero print, possibly on the breadth of the market. One of the positives right now is that if you look at the wins percentage, it's been down here for quite a bit now. It's been down as oversold territory quite a bit. I still think we could go much lower because RSI is still creating these lower lows, and it still hasn't caught up yet with the wins percentage and these full stochastics within this tool. So could there be more pain in the breadth of the market? I think there is. I think we eventually could see the zero print. And again, we have all the we have all the reasons within the overall world economy and global economy and our United States economy for this continue to play out. I mean, supply chain issues aren't much better. We still have supply chain issues. Inflation, while on the way down, I think the Fed is going to run into a problem with bringing inflation to their goal quick enough. So I think they're probably going to end up making possibly a policy mistake by having these rate increases often for a while. So they want inflation to be down by a certain point, but it's not coming out fast enough. So I think the Feds are going to keep on pounding rate increases until they get inflation down to their goal. And I think that is going to eventually help send this market into possible recession. But I think we're definitely going to see the breadth of the market continue to fizzle out. And we still got a war going on, and there's still threats. I mean, China, folks, don't sleep on China. China's just sitting back watching how the United States deal with how the world deals with this Ukraine-Russia issue, because China has a big interest in Taiwan. So do not sleep on that. So, and we still have coronavirus ain't really gone nowhere and starting to heat back up again in the U.S. So there's a lot of breakouts right here in my town. People just starting to break out again. So there's a lot of fuel to the fire to help, feed this bear market and push the breadth of the market down to the zero level. All right, folks, I gave you guys a lot again. Hopefully this is something you guys can use. And before I close out, let's take a look at futures market, since it is now 5:41 on June 1st. So right before markets open, let's see what the overall futures are looking like. Again, futures are trying to, they're trying to, maintain their level and trying to find a way to break back above and become relevant. This is the daily chart of the Dow Jones. And as you can see, we are still hovering, hovering just around those moving averages on the daily chart. So the Dow Jones, like, is trying its best to eke out a move above this 50-day moving average. We got to see how this week progresses. But so that's going to be a challenge this week, to see if our markets, our Dow Jones, Nasdaq, Russell, S&P can break back above these moving averages. That is what the current look is of our Dow Jones futures charts on the daily chart. Let's take a look at a 4-hour chart. There's a 4-hour chart. So it is trying its best to hold support. So anything can happen with markets today, folks. I don't even want to guess, but we are trying to hold support. So I see that pans out. We could possibly get a bounce here. We got to see. We could get a bounce. We got to see. So anything is possible for direction on a day. Look at the S&P minis, and it looks a little weaker. It's already below 4-hour chart. It's already below its 200-day, and it's struggling to hold it. It's struggling. It's below its 200-day, and it's just sandwiched between its 200-day and its 20-day. So do we get a breakout, break back to the upside, or do we continue to move lower, head back towards the 50-day? Time will tell. We got to see what happens once markets open today. That's where we sit right now. And looking at our Nasdaq futures. So it too has been showing some weakness, and it's just been struggling to get back towards that 200-day. Right now, hovering just above its 20-day moving average, but price has been slowly but surely inching lower and lower and lower in the futures market on the Nasdaq. Rid of this. And one more look, and that is a 4-hour chart of the Russell futures chart, that is. RTY. And again, the Russell even looks Like it is showing a struggle early this morning. The Russell 2 has been drifting back below its 200-day moving average, and now hovering between its 200-day and its 20-day moving average. Will we see a break back towards this 50-day? Or will we see a breakout above the 200-day? We shall see as time progresses throughout the day. All right, so that's the short-term, near-term action. Hopefully there's some information that you guys can use. Oh, I did want to point out, I was going to point out a particular stock that I saw some weakness on, and I just decided to add to my overall bearish portfolio. So as I started to see some weakness in the overall market, I started to look for some unusual activity in the options market, and one that kind of caught my eye was Target. Yesterday, Target traded as high as almost 167 bucks, around 166, and then it pulled back yesterday. What I noticed with Target is looking at a 4-hour chart on Target, how after this big move down in Target, let me switch back to a weekly chart. Yeah. So after this big down move in Target, about 2 weeks ago, price action on the weekly chart pushed all the way down to its 200-day moving average. And then we pretty much just bouncing around at the lows. But if you look at a 4-hour chart, had that big gap down. Normally gaps fill on the way back up, but sometimes gaps take a long time to fill. It could take a year. I think Target is running into some more resistance already. So drop down to as low as 145, rally back up to around 160, 167, and look what's happening. So nice rally back up to the 20-day moving average. Looks like it's starting to run into resistance at the 20-day. It's a very, very hard. It's kind of challenging for price action to break above that 20-day on this 4-hour chart. You know, what does the daily chart show us? Okay, daily chart shows that the moving averages, the 20-day moving average is coming down to possibly meet price. And we already have the 50-day below its 200-day. That's all bearish signals to me. So we could stay in these oversold levels on the daily chart for a minute. So that's something to pay attention to. I saw some unusual put option activity in here with the, I want to say, August contracts, possibly even July or August, with somebody making a big bet to see price action drop below 140. So I jumped in here with a negative position on Target. And again, like I said before, and then look at the monthly chart of Target too, folks. That's a telltale sign in itself. Look at this monthly chart of Target. It is strictly negative. If you look at, look below, and looking at our full stochastics, it is straight negative. Point straight down. Our wins percentage point straight down. RSI point straight down. It looks like there's definitely some more room to the downside than the upside for Target. So this is some food for thought. And again, the IWM, which is the ETF that tracks the Russell. I've seen a lot. I continue to see a lot of unusual put option activity built up in this. So there's folks still thinking Russell will be going much lower in the longer term. All right, folks. That's all I have for you guys. Hopefully, you guys enjoy the rest of your day. Enjoy the rest of the trading week. And if all works out, I'll probably be doing another update probably within the next 24 hours. Let's see. All right, folks. Enjoy your day. Take care.